Hi everyone, I'm Ken, the inventor of the CTKS method that shows where smart money is buying and selling. Each day I seek to give you an edge in the market using professional smart money rules and thinking based on my more than 30 years experience in financial markets, to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. If you want to get the institutional edge, please subscribe. You'll find we have one of the best communities on YouTube. Please note, I don't have WhatsApp or Telegram. Let's run the numbers. Bitcoin is currently up 0.29% to 23,455. Ethereum is up 0.21% to 1644. Many people in our global family are going through life pullbacks at the moment. No matter what you're going through, it's really important to keep a positive attitude and keep on fighting. And please know, our global family's love and healing thoughts are with you. You're not alone, and the sun will come out again, and there's always hope. As professionals, we have a very specific way of looking at the market. We make sure we have our foundations. We look externally to the crypto market, checking the stock market, and many thanks for everybody's comments in yesterday's video. Once we've looked externally, we need to find the market's focus, understanding that opportunities reset daily and enhancing our pattern recognition. And of course, all of these skills are equally applicable to Forex and the stock market. Before you buy and sell, it's important to have a positive excellence aim. You need to master emotional control, or else fear will take over your buy and sell decisions. As Wabi Sabi said a couple of days ago, fear forces decision making. It forces action or inaction, and typically in the opposite direction than the one you intended. And as Stamina said, we must be balanced internally. It's very, very important. Edwin mentioned, we're not retail, we are professional, but we understand retail thinking. When we look at the top 8 in the stock market, we're actually looking for retail sentiment. And of course, we're looking to stack probabilities. Masterclass students, you get my live chart in TM6. When we look at the fear gauge of the stock market, the VIX, what do we see? The VIX came down. What did that cause the NASDAQ to do? It caused it to spike up. And what was happening with the dollar? The dollar rebounded. What did yields do? They popped up because the Fed is saying that we need to hold rates longer, higher for longer. And we've seen that already. We look at the statistics every single day. And what statistic is that, Ken? What are you talking about? I'll show you. I actually cover off a huge amount of data in the opening sequence, and all that is about is to try to just keep your finger on the pulse. You can see for the FOMC meeting at the 22nd of March, there's now a 26.2% probability of a 50 basis point increase. That is actually down from 29.9%. one day ago. That actually caused the VIX to come down, the major indices to spike up, but it's fascinating to see yields go up and the dollar go up. Of course, gold will get hit. Gold doesn't like inverse real rates. It actually moves in that direction. If you would like to know more about that, please put in the comments, inverse real rate me. We've also seen that oil is just petering off. It's starting to encounter a lot of selling resistance at this resistance level. And what we actually notice from junk bonds and high yield corporate bonds, we've had a little bit of an uptick. Is it enough to actually hammer in a bottom? Are we rallying from here, or is there more downside? You wanted more about the stock market, and here is a really, really good place to start. What we're looking at is the S&P 500, the 9 sell-offs and recoveries in the S&P 500 since 1966. And the current price of the S&P 500 is this deep white line. How does it look to you? Does it look sick? Does it look healthy? Please let me know in the comments. It's very, very important at this particular juncture. And what do you think retail would think about this? Remember, when it comes to the market, You control the trade or investment, but the market controls the return. That's why it's critical to do your daily three-dimensional risk management. It's all about your active learning. A lot of YouTube channels are just saying, oh, look, it's going up, it's going down, and they don't make you think. You need to think, you need to participate. That will make the difference in profitability. You wanted more on the stock market, so let's dive into the one thing that you must keep your eye on, the DXY. When people look at the DXY, they just assume it's been trading for a couple of months. So this is the resistance. Everybody will tell you that. At least all the retail investors and traders out there. We are not retail. We are professional. And there's a big difference at how we look at the market. As you let me know that you want more on the stock market, I'm going to zoom into this particular area. There's going to be a lot of retail sentiment saying the dollar is just going to go to the moon. Well, it could go up, but it's got a lot of challenges ahead of it. Or does it? Let's have a look. Let's have a look at the zoomed in DXY, and I've just taken all of our institutional grade lines off. Now, why have I done that? Why have you done that, Ken? Because I want to show you how retail thinks. What retail will do is they will say the DXY, only the chart pattern in the immediate chart is important. So this is all the resistance. It's probably around there. And this is the support, and that's resistance, and they just go from there. They don't realize that the DXY has been trading for a very long time, and institutions don't pick and guess like that. They actually do their research. They put in the time. Currently, the DXY is 104,974. There's a lot of things that impacts the US dollar currency index. And what you can see here, when price came down, when it couldn't be supported in this smart money buy zone, what did it do? It actually ping-ponged to the next major buy level. And what did it do from there? It retraced. When you see price slicing through a smart money buy level, it often retraces back to it at some point in time. This is very important to understand. And of course, if I move this up, there's a lot of other levels below it. This is where we're different. The CTKS method is all about telling you how price can slow down or speed up, either to the downside or to the upside. Normal technical analysis only tells you retail logic and retail thinking. And if you look at a lot of the TA that's done out there, it's done very haphazardly with no structure and no real method underneath it. The CTKS method is totally scientific by nature. You'll need to keep your eye on the DXY all the time. The DXY is incredibly important, and we can see a smart money sell level at the moment because price is below it from 105,007 to 105 about 139. So just keep your mind that there's a sell or resistance level just above the DXY. If we start to get above the 105, 150 mark, it could be very, very interesting because there's a bit of a fresh air gap up until the next resistance level. You asked for more about the stock market, so here it comes. Here is Tesla, and we're going to mark up Tesla with the CTKS method. Don't forget, this is a scientifically structured method. We don't use any subjectivity on this. It's all objective. One thing that you'll continually notice with the CTKS method, when you have a smart money sell level, it'll often hit the smart money sell level and bounce back to the smart money buy level. And it will ping pong between the two. When we look at actually what happened recently with Tesla, as it came down, it actually was caught by a smart money buy level. It was a precipitous drop. But if you think about it, if you knew that this smart money buy level was actually in the market, you could probably sleep more soundly at night, actually knowing that. And this is the power of the CTKS method. It reveals like an X-ray the actual underpinning institutional market structure. The CTKS method is all about predicting where price will actually slow down and potentially reverse in terms, and you can see it right here. Price dropped from this level down to this smart money buy area. And I have a bit of a special treat for you. This month, if we get a sell-off in Tesla, we would expect any price between, first of all, 166 down to 142. And if we get a rally, it will be between 233 to 304. I think this is very good for you to understand how to actually apply the CTKS method. This is much, much more than just lines on a chart. If you would like to know the levels below Tesla's price right now, in tomorrow's video, just put a comment in. Please show me Tesla's below support levels and I'll know what you mean. The stock market is utterly huge, so if you want something analyzed by the CTKS method, I'll have a special link in the description of this video where you can let me know. Bitcoin is a very, very powerful indicator of where the main markets may go. A lot of people actually don't look at crypto in the right way. Crypto is the next generation of the internet. It's Web 3.0 or the Internet of Money. It's not going away. A lot of people in crypto are a little bit scared of actions by the SEC and other US departments. But what is it really about? If we look at Binance, it did $49.43 billion of volume in the past 24 hours. OKX did 10.8 billion. Upbit did 2.2 billion. You get the idea. There's billions and billions of dollars of volume passing through these exchanges, and the banking system is not happy. Look at all those juicy fees just disappearing into the ether. Excuse the pun. All that regulation will do is just up the fees for consumers. That's all it will do. And you might say, Ken, you're so wrong. It's going to protect consumers. Consumers are not protected even under SEC laws. If you look into the stock market, you can see many times that there's been, for example, the Theranos fraud. There's so many examples. Have you ever bought a stock on the stock market and the actual company delisted and you didn't get a cent back? Please let me know in the comments if that has happened. I'll put a comment in right now. That's happened to me. The point is, it's all risky. And why is that? Because risk and return go together. If you're a stock market investor and you think all this crypto stuff is just rat poison, just look at crypto like you would look at junk bonds and high-yield corporate bonds. These two measures, well, these three measures, especially if you put Bitcoin in, can actually dictate market turns. It's very, very important to understand. The crypto market is much, much simpler than the stock market. Basically, no alt can escape Bitcoin's gravity. And you say, Ken, what's an alt? Well, it's basically any other crypto than Bitcoin. And when you look at Ethereum, Ethereum is an alt. What is this blue thing at the background? Well, that's Bitcoin's price momentum. I call it Bitcoin's fingerprint. So you can see Bitcoin's gravity as well. You can see the gravitational pull of Bitcoin is very, very strong. Sometimes, what happened with this one? And what is that one? That's BNB, Binance Coin. Binance Coin is under Bitcoin's gravity because there's a lot of attack on Binance. Why is that? I don't know. I think daily there's 49 billion reasons for the US government to attack Binance. But why is it doing that? Because it just wants to give the banks the slice of the fees. Now, why is it doing that? Because it can collect tax on those fees. Well, not bad, is it? As soon as their banks get their fingers into the pie, what will happen to crypto? It will immediately become safe and everybody can get in. Let's have a look at XRP. If I sound a little bit jaded, it's because I have a finance degree and I've worked on government task forces. You'll be surprised what goes on at the highest levels of government. XRP, we can see Bitcoin's gravity impacting XRP. What about ADA? ADA is substantially weaker than Bitcoin at the moment. What about these three things? They don't look anything like Bitcoin's gravity. Correct, they're stable coins. And if you're new to crypto, you've probably heard a stable coin is stable. It's always a dollar. Like, for example, Tether to USD is always $1. Well, you can see Tether USDT is not always $1. It's always wobbling around. What about Circle? Yeah, that's wobbling around too. What about BUSD, issued by Paxos, currently under investigation by the SEC? You got it again. That wobbles around. Stablecoins have never been stable, and we go into how to use stablecoins to predict market turns inside the masterclass. In yesterday's video, I talked about Bitcoin and the double golden cross. Not the double cross, the double golden cross. And I mentioned the past time when we had a cross, a golden cross, price went down, and this time we're getting another cross. And what is price doing? It's going down again. And I said this is quite likely on the cards, but if you've been doing your CTKS method, especially the CTKS code, you've not been caught unaware. You're actually using this time for your advantage. Let's have a look at Bitcoin and let's see what the retail mindset would say. They would say Bitcoin has only been trading for this particular period of time. Oh, it wasn't trading for 13 years? No, it's only been trading for a couple of days or a couple of weeks or at best a couple of months. You can see how incredibly wrong that thinking is already. Institutions don't think like that. They do the hard work. They have actual institutional research departments. They're always looking into things. So let's have a look from the retail mindset. The retail mindset will just draw one or two lines on a particular price chart and say, I know with certainty that this is going to happen. And they also say, pretty much in the same breath, but I really don't know. And the last part is very correct. None of us really know. All we can do is to stack probabilities. The closest thing to certainty you'll ever get is the CTKS method, and I'll prove out each and every day why that is the case. What we can see here, retail would say, oh, there's a very strong level of resistance here. Look at how price reacted. Very strong level of support here. Oh yes, this resistance has been retested. Oh, I don't know what happened there. That was a retail trap. There must be support around there. I don't know. And they would basically say, the first thing they would say is that there's a level of resistance around here or possibly around there. We need to know the resistance and support levels because we need to know where price can go, down or up. Let's put our X-ray goggles on. Yeah, wear goggles, not glasses. And what we see here is there's actually no resistance there. The smart money sell level was up around the $24,000 mark, and there was an absolute bucket of support down here between, for example, 23,000 and up to 23,325. You can see just how different the picture is when you understand what the institutions are looking at. And what actually happened here, we can see that there was a rejection. We're actually getting stronger in terms of positive momentum. And also, we've been making higher lows. But this one is a little bit tricky, the recent price action. We've come down into the smart money buy area because it existed below price at this point. So it's being accumulated at the moment. But you can see just the rejection inside this $23,500 area. So what is actually happening and what does price do? It's pretty much, as I mentioned before, it just ping-pongs in between smart money sell levels and smart money buy levels. Smart money sell levels, smart money buy levels. Smart money sell levels, you get the idea. It just is so different to look at a chart like this. If you would like to learn the CTKS method, you can find it in a module on the ctksmethod.org, or you can find it as an LV series released inside the masterclass. You also may like to consider applying for the Beardy CTKS Partial Masterclass Scholarship. And thank you, Beardy, for your kind generosity. And thank you to all the other people who funded partial masterclass scholarships. These people want you to learn. The secret with all trading and investing is to get into synchronization with the markets. The market transfers money from the desynchronized to the synchronized. Everything that you can do to get synchronized is the way to go. And we can see when we look at the shorts on Bitcoin, they've been coming out of the market. What have we actually noticed with the longs? The longs have been piling in. But what is price actually doing? It's going down. So when you look over the past 24 hours, you've seen a lot of negative price momentum. The longs have been hit. Now we've seen a bit of a short liquidation and now a long liquidation. Let's see how this plays out in the derivatives. We look at this because we're always stacking probabilities, and we can see total liquidations across the past 24 hours. 54.68 million across 24,415 positions. And when we look at total liquidations across the past 24 hours, 69% long, as we anticipated. What about the past 12 hours? It went down 68% long. What about the past 4 hours? As anticipated again, around 88% short. But we would expect long liquidations in around the past hour because the price has been coming down. What's been happening? We're correct again, a little over 88% long. When we look at total liquidations, we can see through the EC method that we've overcome a level of resistance, but we already know from the CTKS method we have a level of smart money sell above and a big level of buy below. What does that mean? It means potentially we could witness more negative price momentum. Price is always moving in a wave, so no matter what happens, you need to have a strategy. Looking at the greatest gainers yesterday, how did they fare up? Did they keep on gaining? Did CFX actually keep on going? You can use this understanding to actually spot opportunities inside the crypto market. We can see CFX came down when Bitcoin came down. Did it follow Bitcoin's gravity? Absolutely it did. What about Maker? It also followed Bitcoin's gravity. What about STX, Stacks? It also followed Bitcoin's gravity. What about Filecoin? Followed. What about Aptos? Followed again. What about DYDX? Followed as well. What about Phantom, AGIX, Singularity Net? We can see that they all follow Bitcoin's gravity. A lot of people don't look at Bitcoin, and that is a huge mistake. Why do we look at the stock market, even though it's fun to look at the stock market? Because Bitcoin cannot escape the stock market's gravity. All of these financial markets are interdependent and intercorrelated. Let's check out the greatest gainers today. The greatest gainers in the past 24 hours are a very weird collection. It's a very weird group, actually. Look at Threshold. Threshold did incredibly well. And Threshold was actually an inverter. Just bear that in mind. That's something worth looking at. EOS, we can see EOS actually starting to invert on Bitcoin at the moment. And Mina was also one of the greatest gainers, but it didn't really gain by that much. USDP, Paxos dollar, you can see when the Securities Exchange Commission came out and said, we're just going to attack you, Paxos. Look at the decoupling here. Wow. Depegging. Didn't do too well. And when we can see ETH as one of the greatest gainers and OP as well as Stellar and Bitcoin, we know that the market has sold down quite substantially. These big giants to make it to the list of the top gainers and on a red market day. Wow. In yesterday's top losers, we saw USDD, USDC, which is Circle, BUSD, Binance Dollar, and the DAI stablecoin. 4 stablecoins making up the list of the greatest losers. We also saw Clayton was the greatest loser, followed by NEM, followed by Immutable X, followed by Elron. What does it look like today? I mentioned a couple of episodes ago that frequently you'll find the same kind of names, like with the same kind of letters appearing. What was the greatest loser in the past 24 hours? Well, FXS, followed by Clayton, followed by CFX, followed by DYDX, followed by IMX, followed by STX. Did somebody just get confused and sell all the X's down? Then there was also Maker and XEM. What we've actually seen is that Bitcoin's gravity is still raining. And you might say, but in Clayton it's not raining. It's just, well, it's raining on Clayton, but the point is, it's not, Bitcoin's gravity's got nothing to do with it. Really? Well, let's check into that. Let's have a look. What I've done is to just zoom in on this price area. Do you see any correlation between Bitcoin's gravity and Clayton's price momentum? Please let me know in the comments. When I zoom out, it may look a bit weaker, but you actually, if you zoom in, you'll see it all the time. They're just pinging each other. Mindset is an incredibly important thing when it comes to trading and investing. Being kind to yourself is incredibly important. Johnny had a really good comment from yesterday's video. Being unkind destroys your health, your wealth, your relationships, and your day. Everyone and everything you come into contact with is affected, and it has a negative ripple effect on the world. Fortunately, the opposite is true with kindness, and being kind is a choice we can make any time. Even when we don't feel like it, we can make the choice to be kind. Thank you, Johnny, for your very insightful words. Kindness is part of positive excellence, and positive excellence is the foundation of the professional mindset. If you want to lead a happy, meaningful, and successful life, you just follow this to-be list. Kindness is part of that. Courage, authenticity, gratitude, happiness. There's so many things in positive excellence, but it's all about actually leading your best life. The key is to understand that money doesn't change people, money reveals people. When you get mega wealthy, who will be revealed at that time? Anybody who's been trading and investing for any period of time knows that trading and investing is a mind game. It forces you to confront your fears. It forces you to become a better person. That's why, as a global family, we know that better habits create a better life, and all results come from our mind. If we're not getting the result we want, we need to change our mind by changing our habits. And the best habit to change is the way that you look at the world. And we do that through the CTKS Creed. These are daily positive affirmation statements for abundance, financial success, and happiness. It really does matter. Let's go for it. I know the universe is designed to make me succeed. Every day I show kindness, integrity, and gratitude. I know opportunities in life reset daily. I am worthy. I go slow to go fast. I start small and scale with Borsog. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. I always solve my problems with positive excellence. Have a great day or night ahead, my friends, and Kate and I look forward to joining you tomorrow. Bye for now.